Okay, so we're looking at Ethereum right now. Now, the Ethereum on-chain data right now for us in terms of everybody that is a holder of Ethereum, December 19th, 2022. Everybody that is a holding Ethereum, okay, the blockchain data analysis for Ethereum is as follows. You have 45% of the token holders of Ethereum today are in the money. What does that mean? It means that they bought below the current price of $1,170. 50% of Ethereum holders are out of the money. Okay. So what that tells you is they bought above 1170. And you got about 4% of traders are at the money, right around 1170, give or take. Okay. And so that's your in and out of the money, okay, on the block for Ethereum. The block holds all of this information, mates. This is your on-chain analytics, okay, that everyone should be using. I know no one's talking about it. I know nobody says these things when they do these trading videos and trading influencers and all that. That's not what I'm about, okay? I'm about data analysis, quantitative analysis as it's reflected in the on-chain and as it's reflective in the chart. This is something, mates, that you will not find in the stock market or in the bond market or in the commodities market, okay? It's only in crypto, because only in crypto do you have an ability to validate at what price someone on the blockchain bought and sold. That is, in essence, the value of on-chain metrics. Okay, I can tell you the number of addresses buying Bitcoin, Ethereum, and so forth at price points from the blockchain. It does not matter whether it's on whatever exchange or whatever. Those transactions are happening on the block. Okay, and so now the next question is always, Jay, well, where do we look at with Ethereum today in terms of holders? How long have people been holding Ethereum? Okay. Well, that's on the blockchain, right? Now, the other thing the blockchain, the IO map shows you on the blockchain, and you can look at this short video. I'll put it up in the description, that you can look at what the IO map looks like. The bubbles of accumulation, okay, will determine your resistance level and support levels. Okay, what does that mean? Well, we're trading now at $1,167. Okay, we know that 45% of the people bought Ethereum below that, and 50% bought it above that. That means 50% of the people are resistance to the current price because they're above it, okay? And it now has to go past it. Does that make sense? Okay. 67% of all people holding Ethereum today have held Ethereum for more than 1 year, okay? And of those 67%, 45 of them are in the money, okay? So that tells you that 22% of people who have held Ethereum for more than a year are out of the money, okay? They bought above the current price of $1170. Remember, Ethereum went as high as $4,000 last year, or during the last year, okay? So remember that. 28% of token holders have held Ethereum for 12 months or less, and only 5% have held it for less than a month. So only 5% of all owners of Ethereum have bought since right before Thanksgiving up until today. Okay? And so that's where we stand. Now, when you translate that over, when you take your bubbles off your IOMAT, okay, what are those bubbles? Those bubbles tell you the number of addresses that bought and sold at certain levels, okay, on the spectrum over the last year, going all the way back. Okay, you can go further, but over the last year. So we know now ahead of us, both Bitcoin and Ethereum have a significant liquidity barrier, which is going to act at resistance. Okay. For Bitcoin, that level is 19,200. It's not 18,000 like people are telling you. It's not. If you go on the IO map, you will look 18,000. The 18,000 level in Bitcoin has a far, far less number of addresses accumulating at that level. So the hurdle is less. At 19,200 to 20,200, you have roughly 4 million addresses that have accumulated Bitcoin. Okay? 4 million. Okay? That's 4 million addresses. Now, say each of those addresses only purchased one Bitcoin. That would be 4 million Bitcoins. Well, the supply is 21 and the outstanding supply is at 19 something. Okay? So 4 million of the 19 million that are out there were bought in that range. That's a significant liquidity event to happen. And it will probably act as resistance for Bitcoin in the short term, in January. Okay. But if it broke through that level, okay, if it broke through that level, you would see Bitcoin climb to $22, $23 pretty quickly. Okay. I'm going to try and grab, if I can, we'll see if what happens. If I can grab the Ethereum, maybe not. We'll see if it loads up the IMAP stuff for you to give you that. But for Ethereum now, we are falling below our 7-day of 1179. Okay? We've fallen below that. We've broken now the trifecta. We broke our 30-day at 1213, our 21-day at 1183, and our 7-day at 1179. Okay? So we've broken through three major, okay, daily moving averages. And you certainly can use exponential if you want, but just stay consistent on your time frames. I use 7, 21, and 30, and I use the 4-hour. And it's been the more successful for everyone in the trading group. It's been a lot. When people, we've back tested it. People have been a lot more successful using the 4 and the 1 hour. Okay, use that 1 hour to dial in an entry or an exit, and then use the 4 hour to monitor the trade. It's kind of like your really one of your best methods for that. So again, 1168 now. I'm going to try and pull up here. It'll load up. It's trying to break through its 55-day. For sure. Which is obviously a longer time frame than I use, a 30-day. You can use simple moving average, exponential moving average, daily moving average. Ethereum does not have the same ascending triangle pattern, ascending parallel pattern that Bitcoin has had, believe it or not. Usually they kind of correlate with one another to such an extent. But because we're in a bear market, Bitcoin's a lot more sensitive, and then Ethereum reacts. It's interesting that the longer averages are the ones that are kind of interesting to look at. Just to kind of give you a little bit of kind of like a broader thing of where we've been the last 200 days, right? We don't trade off that, though those are significant trend lines that people will use that are more technical traders. Because that rejection, you've got to look at the fact that you've got the same thing happening, in terms of higher highs and higher lows, like, before the event on December 15th that shook the market because of the Fed. And you had the Binance issue with its capital reserves that kind of shook the market. So if you had like November 28th low, then another a higher high on the 29th, a higher low on the 3rd, a higher high on the 5th, kind of a little bit low, kind of broke it out a little bit because it did go lower here on the 7th. But then you've got some higher lows, and then it broke at that 1275 level, which was our cross on our 7-day, which broke the camel's back, and Ethereum went from 1275 all the way down to 1150, and the traders in the trading group captured 40, 50, and 60% gains shorting Ethereum. Why was Ethereum shorted? It was just shorted because it was a trifecta cross. It crossed the 7-day, the 30-day, and the 21-day, and then dumped, okay? Then it rose back above temporarily the 7-day, and we've been right on in the 7-day, and now we've dropped below the 7-day. So the 7-day, 11, is now at 1179. We are trading at 1168. So in this 4-hour candlestick for Ethereum, we are under the 7-day, which means we are under the 30-day at 1213, the 21-day at 1183, and now the 7-day at 1179. Why is that significant? That's significant because if she continues to fall below those trend lines, she will not have any support until November 28th low of 1160. Okay? She's only $11 from that. And then if that is to fall, she falls all the way back down significantly. Okay? So let's look at where she would fall. She would fall all the way back down here, mates, on the chart at 1080. 1080, mates. Okay? And so that's why this is a significant, very significant opportunity today to keep an eye on this 4-hour shtick. Okay? You've got a little bit of support on the IOMAP bubble, probably about a 20% bubble, which is not a big bubble by any means, right at 1160. So, again, 15 basis points from there now, above it. So there is a little bit of support, just a little bit underneath it, that could keep her up. But the critical move now is to get back to 1179. Okay? She has to get back above the 7-day on the next 4-hour stick. If she closes the day above it, you can pull that up. But again, this is on the 4-hour chart, mates. So make sure that you're that. If Ethereum does break above that level, 1179, and holds on a 1-hour candlestick, or 4-hour, she is going to test the next level, which is 1183, which is not that far away, mates. It's like 5 basis points, okay? Then the big gap to fill, if you're a leverage trader, is on that break, because then you've got 1183 all the way to 1213. You've got a gap to get filled there, okay? And if you look at your chart, remember, Ethereum sold down from 1278 all the way down to 1160 level. There's a huge gap there to fill, and there's no resistance there. There's no liquidity there to keep it from rising back to test its 30-day, okay? Then when you get at the 30-day, there is a little bit of resistance. So, and realistically, okay, your first target on a break of the 7 and 21 day, okay, there's the caveat. On the break of that, your first target is 1250, okay? And then after that, it's 1350. So you mark your zone. Remember the zone. We know that we've got heavy support at 1165. So that is, okay? And then we've got resistance at 1340. Okay, now look what's happening right now, mates. On the chart, we're getting a run right here. A little bit coming up. You'll see the wick here on the 4-hour. See how that wick is getting bigger underneath. The underneath on your candle, Heikinashi, the underneath wick, the bigger that wick goes, that's telling you that there are not enough sellers, meaning there's more buyers in the market at that level than sellers, and the price is going to start to rise, which we are now seeing it rise now to 1175. So it's gone up 8 basis points since we started this stream, okay? And you can see that on your chart if you're following me along on the other channel. And And so it wants to test 1180. Okay, that's what it wants to test. That's the 7-day DMA. And so that's Ethereum. So you've got a target of 1250 and 1350. If we get the break of the 7 at 1180, now it's 1180, okay, and 1183. Really close together on your 4-hour, mates. We get a break of both of those, 7 and 21. We are going to test that 30-day. We're going to test 1200, okay? And so that's a really, really good trade. And then after that, the reason why you got a lot, there's a little bubble at 1195, okay, on the shorter time frame to keep an eye on. So you break through that, you're going to break through 1200. So the three equal highs, you had the three separate equal highs from the 11th of December to the 14th of December. And then it shed about 8% since then. It's an easy way to look at what happened after the 15th, after the Fed raised their rate, and you saw what happened with for Ethereum. So that's, that's how you want to look at it in terms of that. Now, for those tuning in for Bitcoin that didn't follow, a little Bitcoin summary. Bitcoin is going to be acting a little bit different. So we'll switch over to Bitcoin now. You can follow the videos I did already today on Bitcoin on the channel that had the channel map that showed you the ascending channel, the 4 higher highs, 4 higher lows. If you took away the December 15th issue with the Fed, which kind of disrupted that channel, that was about ready to, Bitcoin was about ready to break back out, okay? Because it was right at that smaller resistance level of 18,200, okay? Remember, we shorted at 18,300. Remember that? And so this is the outlook right now on the 4-hour for Bitcoin, okay? It is straddling its 7-day DMA just like Ethereum. So they're waiting to provide us with a little intentionality, okay, on what is going to happen. What movement? Remember, holiday weekend, lower volume so far, okay? If you're on the other channel, I'm going to change these, obviously, because I reloaded the charting, so I'm going to change these. This is an easy way to do it, mates, is come right up here in the left-hand corner. Just click that middle icon, and it'll allow you to change your time frame, okay? The exchange will default usually to a 5-day, 10-day. I prefer a 7-day. So simply just hit that icon on each one of yours. And you can set it permanently as well. If you're only trading on one exchange all the time, I kind of flip-flop to use some of the strategies. Because a lot of exchanges won't allow you to do all of the strategies on their particular exchanges. For example, some exchanges will not allow you to have an open long and an open short in the same asset at the same time. So when you employ that method, you want to have 2 exchanges. You can be up on one and down on the other. So that's what that is. So we're trading at 16. We are falling below our 7-day at 16,700, okay? We are down now to 1,606.03. So we're almost 100 basis points below the 7-day moving average, okay? And we're hitting a critical level in Bitcoin because there is no support level until we get down to 1,600 and 400 channel, okay? So we have supported about 250 basis points lower than where we are right now, and nothing to bump us up. Okay, so we would likely fall down to that level of 1,600 and 400 to 500 again, which is a critical support level for Bitcoin liquidity wise on your IOMAT, mates. These areas become crucial entry points. Okay, either way. So if it gets down to the high level of liquidity, it becomes support, you would buy the leverage trade up on the bounce, okay? If it breaks your liquidity level, which was supposed to be support, like the 7-day did, okay, within the last 8 hours, that's a short. That's a sell down signal. That's telling you the intentionality is they're going to go lower, okay? Both Bitcoin and Ethereum. Now, that level is a November 29th level, 16,400, offering a lot of liquidity support. So that's a good indicator that Bitcoin is going to challenge that level to fill. And then if it bounce, now if it fails to bounce off that liquidity level of support, remember, you're talking about millions of addresses purchased Bitcoin, okay, at that level. It will then proceed to fall down to the 15,000 level, okay? And that's what a lot of people are talking about when they're telling you about Bitcoin's going to 12,000. They're talking about it blowing through these critical support levels, okay, of liquidity. That's what they're telling you. Close and taking them out. That is what, in essence, they're saying when they're looking at the trend, the technical analysis, comparing it to the last cycle of Bitcoin halving and looking what happened then, 85%. You'll hear people use the terms Fibonacci and all that stuff. I don't use that stuff because I don't need to. Like, if you know how to trade off the trend line moving averages, Fibonacci is a great tool to kind of tell you, okay, if it repeats the pattern, but Bitcoin today is not Bitcoin of 17 and of 19. There are a lot of other factors like institutional. So a lot of people seem to think, a lot of people are using kind of a false level of information of analytics. I understand the value of it, but a lot of times, is Bitcoin going to go down 85% or whatever from its top in 2022, 23 because it did in 17 and 18 or it did in 19 and 20, right? That's what they're basing it on. It doesn't always work when you have a lot more institutional money and a lot more institutional exposure. You need to find out what's happening on the on-chain, on the block, okay, is what you need to do. And so it's important to realize that when you're looking at this. And don't just use Fibonacci and go, oh, it's going to automatic. No, not necessarily. I mean, it's in theory, it could, right? But it could also just as easily have gone from 18,000 to 22,000 Bitcoin if the Fed hadn't done anything, right? The Fed did the 50 basis point and kind of indicated that they'd do another rate hike, right? That's what shattered the movement, okay? If that event doesn't happen, then the 85% decline Fibonacci is invalidated, okay? Always keep that in mind, mates. Always keep that in mind. It is a good tool. I know people will hate on me for saying it that are just Fibonacci worshipers, but it doesn't always apply. It doesn't always. I prefer to use within the 4-hour time frame, what's happening today in the world, what was the news this morning and last night, what was the futures market doing, what's the price of oil, what's going on with gold, all that stuff today is going to influence the market, okay? Not so much what a chart average technical analytics from Fibonacci from over the last bull cycle and sell down and halving of Bitcoin, okay? It's great to know that information, okay? I will never tell you that the more information you have, the better to make an informed decision. But right now, we're looking to test down at 16,400 to 16,500. That is a critical support level in your IO map and in your on-chain with the number of addresses of Bitcoin that accumulated Bitcoin there. Institutions are likely going to defend that level because they probably bought a lot of Bitcoin at that level, okay? And they probably just bought it back. If you look at the on-chain, you can tell the volume and you can tell the size of the purchases of the address indicate to you there were what get classified as whale-ish size addresses buying Bitcoin above 16,000. Okay? So in all likelihood, that's going to get defended. Does that mean it's going to hold? It doesn't. It doesn't mean it has to hold. But in all likelihood, there's going to be a fight at that level. Okay? And you can see here in the chart, we've got a little bit of a wick forming here on the 4-hour, which is good. That means there's not enough sellers. Okay, there's more buyers coming back in, and you want to watch that. And so keep that in mind. Both the Ethereum and Bitcoin right now are running in tandem, okay? They're both below their 7-day moving averages, mates. And until they test back up, Bitcoin's got a little bit more of a move here because it's trading at 16,597 and it needs to get to 16,700. So it's still 100 basis points from its first move. Now, people would say, Jay, is that where I should put my entry point? You could certainly put a limit. Again, not financial advice, not your financial advisor. This is solely for educational purposes, okay? So it's like that trend line is where you could put a limit order. If you thought that it rose back to that trend line and was going to break that trend line, you would put a limit order in, okay, at 16,700, okay, in order to break that and then move and test 1674, okay, 16,740, and then 16,989. Those are your indicators, right? Remember, your top of your zone right now is 18,000, okay? Forget about the wick of that December 15th stick that was crazy. Discount the wick. Just take the solid hiking, okay? 18,070, all right? At 18,200, there is some liquidity, but it's not enough to act as resistance, in my opinion. The real resistance is 19,200. Beginning in that zone to 20,000 is where there is significant resistance, which if Bitcoin breaks through that in the new year, here we go. Okay. And a lot of people are saying it's not going to happen. A lot of people are saying Bitcoin's going to tank in 2023 down to 12,000 or 10,000 or 8,000 because the Fibonacci says that's what happens every cycle. But just remember, every cycle we did not have this level of institutional exposure who cannot afford to lose money in Bitcoin on their books. Okay? Just telling you. So it could happen. They could all be right, and my analysis could be wrong. That's the beauty of crypto. Okay. So for Bitcoin, yeah, I got sure thing, bud. All right, Matt. Yes, 44% of the people are in the money right now, Matt, in Bitcoin. 50% are out of the money. Very, very similar to Ethereum, right? Almost identical. 6% of Bitcoin holders are at the money, okay? And so your holder composition for Bitcoin, 71, more than Ethereum, 71% of people holding Bitcoin right now have held it for more than a year. 22% have only held it for 12 months or less. And 7%, that's a big number on the 1 month or less. That is a big number if you track this stuff like I track. It's usually 3 to 4% of new money comes in every month into Bitcoin. That's new addresses, okay? Or old addresses, but have held that coin for less than a month. So 7% of all of the Bitcoin tokens held right now in supply, all right, by addresses, have bought Bitcoin in the last month. What's that tell you? Somebody was buying those low levels at 16,000, right? Transactions greater than 100K. Okay? 100K, mini whale, right? 37 billion. Interesting, huh? Crazy. But that's how you use the on-chain data, mates. And then you want to plug that into your chart. You obviously can hit me up in the new year. Obviously, the holiday's not really exact. This week is not the great. I want to get everyone started in January on the tutorials for the Deepcoin exchange, the tutorials for using Fibit, that exchange, to help you. They're two of the easiest exchanges to learn to use these methods. There's not a lot of business stuff going on, all right? And so we're going to take care of that and get you everyone locked and loaded to get ready for the next